Hello, this is Matt on the Moon Family Sedan channel. The FTX-created crypto contagion is spreading as BlockFi has officially filed for bankruptcy today, November 28th, 2022. Technically, it's after midnight, and where I live anyway, Central Standard Time. It's 12:31 a.m., but it doesn't count until tomorrow until I go to sleep. Them's the breaks here on the Moon Family Sedan channel. But we did suspect that this was going to be coming. There were some major concerns about insolvency over the last couple weeks, and that's why, as a result, when the news hit today, the markets were kind of like, eh. Like, seriously, Bitcoin, XRP, pick your crypto, didn't bat an eye, didn't dip. In fact, so a lot of cryptos are up to some degree for the day. Like, as I record this, Bitcoin's up 1.62% over the last 24 hours, XRP up 2.39% over the last 24 hours, and this is as the contagion spreading, but to be clear, that's because this catastrophe, this part of it, was already baked into the price. Whatever fear people would have had if it were sprung on them today, that fear already resulted in them behaving however they were going to behave in terms of selling or whatever. And so it's baked into the price. And you see that, you do see that in markets. You see it in the stock market at times. You see it in crypto. So the fact that it was out there, some people were wondering. I mean, I was wondering too, admittedly. I was like, well, assuming BlockFi does go bankrupt, since it's a known quantity, is it going to cause the market to go down? The answer is no. We now know that definitively. But don't expect the same thing if there are other major firms that haven't been discussed in terms of potentially being insolvent or about to go belly up. If those things happen, firms that haven't been discussed, don't be surprised if markets absolutely tank, which is exactly what we saw when after Luna collapsed. There was some amount of time passed and Celsius passed and more time passed and Voyager passed, all that stuff. So that can still happen. But I want to share with you what's been going on. I've got a bunch of perspective from a number of different people, including Stuart Alderati, who of course is Ripple's general counsel, so he's their top in-house legal guy. I've got some stuff from attorney Jeremy Hogan and attorney John Deaton. But before going further, I do want to be clear, I do not have a legal or financial background of any kind. I am not offering legal or financial advice. And you definitely should not buy or sell anything because of anything I say or write. I'm just an enthusiast who enjoys making YouTube videos about crypto-related topics, but just as a hobby and just for fun. So here's a headline from the Daily Huddle. Crypto lending firm BlockFi files for Chapter 11 bankruptcy, citing FTX collapse. And it's worth noting that, you'll see as we go through this, the SEC is one of BlockFi's largest creditors, which to me, it's just kind of repulsive. Like, where was the protection? Where did that take place? You just sued BlockFi, the gigantic settlement. Like, who did you exactly find with a cape to save? I'm not seeing it right here. But BlockFi, just as a friendly reminder, this is a firm where it's one of the firms, just kind of like Celsius was, where you'd hand over the keys to your crypto so it's no longer in your possession, and then the firm that now has the keys to your crypto will lend out your crypto with the promise of some percentage gains, whatever it could be. Sometimes it's something on the smaller side, could be 6, 7, 8%. I've seen for some of these firms, I don't know what the highest rate was for BlockFi, but for Celsius, it was upwards of like 20%, which really, frankly, should have been a red flag. And so think about this. You're holding cryptocurrencies, which we know for over a decade now have at times offered returns in the hundreds of percentage points, if not thousands of percentage points. And here people are handing over the keys to their crypto for 6, 7, 8, maybe 10%, whatever it is, because those are pretty normal rates with BlockFi, as I understand it. You're giving up the keys for that? Whew. To me, that's always riskier. And I understand that they got the shaft from the SEC and from FTX. You'll see as we go through this. But still, my gosh, it's just the idea of giving up your keys to any other entity when you know that there's that type of life-changing wealth potential in terms of thousands % gains. If that's on the table, why are you giving up the keys for pretty much anything? That's the way I've always looked at it anyway. And BlockFi, by the way, I have no indication that anything they were doing was outright scammy. They seem to be a victim of fraud. But again, the whole giving up of the keys, that's where I start to have an issue with this stuff. But anyway, the piece reads as follows. Crypto lending platform BlockFi is officially filing for bankruptcy after weeks of rumors surrounding the firm's connections to FTX. Today, BlockFi announced its voluntary Chapter 11 filing, naming the collapse of FTX as the primary cause. And here's a quote. Today, BlockFi filed voluntary cases under Chapter 11 of the U.S. Bankruptcy Code. Maximizing value for all clients and other stakeholders is our priority. This process will help BlockFi to stabilize our business and provide us with the opportunity to work towards consummating a comprehensive restructuring transaction to maximize value. As part of our restructuring efforts, we will focus on recovering all obligations owed to BlockFi by counterparties, including FTX. Acting in the best interest of our clients is our top focus and continues to guide our path forward. Chapter 11 is a transparent process, and we will continue to communicate with our clients to ensure they hear directly from us, end quote. Now, per the blog post, the bankruptcy filing stems from the fallout of FTX, and here's one more short quote. This action follows the shocking events surrounding FTX and associated corporate entities and the difficult but necessary decision we made as a result to pause most activities on our platform, end quote. Yeah, so I'm not optimistic that they're going to come out better on the other side with Chapter 11 here. Not optimistic in the least. Okay, so it's whatever happens, happens. I'm not saying what I want. I'm saying what I anticipate. But what's the value in BlockFi at this point? Just an insane amount of debt. And I'm not saying that there isn't a legitimate business to be had necessarily in terms of interest-bearing accounts for crypto. Maybe there is something actually there. I'm just saying that if I'm the consumer, I'm not willing to take on that risk unless there's some sort of insurance. Like in the United States, like, if a bank goes belly up, if you have money in a checking account, for example, you're protected in that individual account for up to like a $250,000 or something. If there was something like that, okay. But outside of something like that, I'm just like, no thanks, not for me. Now, BlockFi was already in trouble earlier this year after the whole Three Arrows Capital thing, that went down, and Celsius, you guys know the story at this point. And Zach Prince, who's the CEO of BlockFi, he put out a long thread, and I'm not going to read the whole thread, but on July 1st of this year, he did put out a number of tweets, including what's on your screen right here that's highlighted. And he wrote, yesterday we signed definitive agreements subject to shareholder approval with FTX US for, number one, a $400 million revolving credit facility, which is subordinate to all client funds, and number two, an option to acquire BlockFi at a variable price of up to $240 million based on performance triggers. So a couple things. In terms of the $400 million credit line, lines of credit are very normal, very common business just in general. And so for those of you who don't know, just for example, like businesses of all sizes use them. But even if you're a successful business and you're profitable, there can be times where there are unforeseen instances that result in short-term cash crunches. For example, just a for example type of situation. Let's say that you're a business owner and you have a bunch of customers that owe you just a ton of money, but they're late, but you still have to pay your vendors. But how do you pay your vendors if you don't have sufficient cash flow? Because your clients, even though you anticipate they're actually going to pay you, they're running late for some reason. They got their own hiccups of their business. Maybe the economy's crap, whatever it is. Well, what happens then? Well, if you have a line of credit, then you can tap into the line of credit. You pay whatever interest rate. It's a very short term, just a temporary loan. And then you can pay your vendors so that they don't shut you down, so that you can supply whatever it is you need to supply to your customers. So that's an example. And so here, they had a $400 million revolving credit facility, they stated here. And so it would have been used for whichever would have potentially popped up. Now, of course, the reason that was appealing is because this is from FTX US, which is, again, what do you want to call it? The sister company of FTX. So this is a United States-based one. And it was assumed that by Zach Prince, the CEO of BlockFi, and everybody else involved, that FTX US was a highly liquid, highly successful business. So it made sense that, of course, they'd be able to offer those type of funds. They didn't realize that it was a Ponzi, despite whatever due diligence they went through. That's unfortunate. And then, as far as the option to purchase at up to $240 million, that doesn't mean that BlockFi was valued at $240 million. That means if time passed and they're successful, BlockFi gets out of this, the things start to ramp back up, okay, super duper. The valuation of the company could be whatever it is, but BlockFi has an option to purchase, FTX US rather, would have an option to purchase BlockFi at no more than $240 million, even if it's worth way more than that. But at the time, my understanding from what I read is that it was worth more like $25 million, and it was just debt-ridden anyway. So that's what went down there. And there were a ton of creditors here. And so then there's this tweet from Stuart Alderati, who is, again, Ripple's general counsel, so he's their top in-house lawyer. And he wrote here, another SEC regulation by enforcement success story, which, of course, is complete sarcasm, as it should be. He said, months after a $100 million BlockFi/SEC deal, BlockFi is in bankruptcy. And so just as a friendly reminder, the SEC alleged that BlockFi was engaging in illegal securities transactions, which I think is bogus nonsense, but rather than hash the thing out in court, and because BlockFi certainly didn't have the funds to handle that, they agreed to pay $100 million, which they believed would be less expensive than battling the SEC in court, which really sounds completely realistic because we already know that Ripple themselves said that Brad Garlinghouse, Ripple CEO, stated that he was anticipating that by the time this is all said and done, Ripple would have spent $100 million. That's what he stated. So if BlockFi somewhere in that area where they're paying a settlement and they can just make it go away, like, okay, actually, that's believable from what we know. And then Stuart Alderati said, $275 million loan outstanding to FTX from BlockFi. Yes, indeed, that is correct. You heard right. BlockFi owed FTX $275 million. Well, don't forget, again, they had this revolving line of credit here. So is what it is. They just thought that FTX would be able to save them. Not so much. It was just the final nail in the coffin here. And then Stuart Alderati says, unknown amounts owed to BlockFi from FTX. Nothing ever registered. Fines paid? With whose money? Consumers decimated. Yeah, exactly. Spot on. And attorney Jeremy Hogan retweeted that from Stuart Alderati and wrote the following. SEC Investor Protection Plan. And he's got 5 points. Number 1, drive crypto exchange offshore. 2, punish U.S.-based company with large fine. 3, U.S. company seeks line of credit from offshore exchange to pay fine. 4, offshore exchange collapses. 5, both companies go under. Did I miss anything? Not very much. That pretty much hits the nail on the head. Although technically the line of credit was from FTX US, but as we know, when FTX went under, so did FTX US. So to what degree there was intermingling of funds and this and that, I don't know. It was supposed to be separate. That type of information, to my knowledge, isn't even available. I'm sure more is going to come out. But if FTX US went under too, I mean, come on. Then there was this from attorney John Deaton. He wrote, read it and take it in. Gary Gensler and the SEC should be ashamed of themselves. What was the purpose of the $100 million fine/settlement? What clarity was brought to the market? What protection of consumers was provided? Capital formation? I think not. Capital destruction? Yes, spot on. Ain't no damn capital formation occurring here. And then in a separate tweet, he wrote, Ripple's general counsel's tweet is important to appreciate. For example, one of the named XRP holders granted amicus status in the Ripple XRP case didn't have an account with FTX, but she did have several $1,000s on BlockFi. But she can't get her money or crypto out, can she? When the SEC settled with BlockFi, she didn't like it, but said, well, I guess my funds are safe because BlockFi is now regulated by the SEC. Was it? What protection did the $100 million give investors like her? She just learned the SEC is the second largest creditor in the bankruptcy. And I saw slightly conflicting interest on that. Attorney Bill Morgan will have his tweet coming up. I think he said that the SEC was the fourth largest creditor. Either way, it doesn't matter. Like, the point's not lost on me. Attorney Deaton's bringing up a great point here. So how is she protected by all this? Was she? No, obviously not. It's not about protection. This is why it's so repulsive. That's one of the reasons. It really grinds my gears, folks. And then there was this from Attorney Deaton. He wrote, this is your legacy, Gary Gensler. After FTX, the SEC is one of the largest creditors from BlockFi, owing the SEC $30 million. What products got registered with the SEC? How did the $100 million protect investors? Where is the $70 million that was paid? And so that is true, by the way. Out of the $100 million that was used, it was to be paid in installments. And $70 million out of the $100 million was paid to the SEC, which was lent to BlockFi from FTX US, which presumably had their funds commingled with FTX, or else why did they both go under? Even though they were supposed to be separate, that was the point of having a separate exchange for the United States, different regulations, this and that. Well, seems to have not worked. So all of those funds from FTX go to BlockFi and then go to the SEC. They're fraudulent funds. My gosh, I hope that these funds can get clawed back from the SEC. I don't know if it's going to happen. It is what it is. Now we have attorney Bill Morgan, member of the XRP community, who wrote the following. The SEC had part of the settlement penalty with BlockFi paid. $70 million paid and an unpaid amount of $30 million, making it the fourth largest creditor of BlockFi by amount. The Chapter 11 proceedings hopefully reveal several matters. Number one, whether the SEC received payments from BlockFi in preference to other creditors. Now that would be, folks, that would really be something. Because you know that there are other firms that were owed money before the whole SEC situation. Did the SEC get preferential treatment because it was a legal matter? Did they get paid first? That would be something worth knowing. Number two, whether the SEC was paid from sources funded by the assets of BlockFi investors being used as collateral without their knowledge. And I'll pause to note, that's a perfectly good question. I'm going to guess that the answer is no. I'm guessing that based on the information, at least that I'm aware of to this point, that it's probably funds loaned specifically from FTX. So that would mean that would be more like funds fraudulently sent that were actually rightfully FTX customer funds. Those funds were sent to BlockFi, and I think that's what was probably sent to the SEC rather than it being funds specifically from BlockFi customers. That's my guess. Although, again, happy to be corrected if that ends up not being the case, and perfectly reasoned for Attorney Morgan to be asking that. And number three, whether the SEC was paid from funds borrowed by BlockFi from FTX or the collateral for those funds were the assets of FTX investors used without their knowledge. I don't know, but I can tell you this. Look at this headline from A&B Crypto. BlockFi sues FTX's Sam Bankman-Fried hours after bankruptcy filing. That's right. The disgusting, shameful butt nugget with an afro, SBF, the founder and former CEO of FTX, is getting sued by BlockFi. Now, that I'm happy to see. Take a look at this. BlockFi sued Sam Bankman-Fried for his shares in Robinhood, an American financial services provider. Interestingly, this news comes hours after BlockFi filed for Chapter 11 bankruptcy protection. BlockFi's complaint seeks Robinhood shares as it was reportedly kept as collateral by SBF, according to Financial Times. Notably, the FTX founder has a 7.6% share in Robinhood, which was acquired in May this year. At the time, the shares bought by SBF's Emergent Technologies was worth a whopping, get this guys, $648 million. And Sam Bankman-Fried is said to have been the sole director with majority shares. Interestingly, this move was followed by plans for a complete acquisition of Robinhood. However, that didn't come to fruition. Can you imagine if SBF also bought out Robinhood in its entirety? My God, talk about a contagion spilling out into something that's, part of, I mean, I know they offer crypto, obviously, but that's more, they were more so at least initially into legacy finance world stocks and that. Wow. So what a freaking mess. So anyway, I mean, there's not much good to say about this other than, I mean, the market didn't tank today. So that just means that, the scariness of that was already baked in. But again, like I said, if further contagion spreads, it's going to go down if it wasn't a known factor. I'm not a financial advisor. You should not buy or sell anything because of anything I say or write. That would be a very, very, very bad idea. Until next time, to the Moon Family Sedan.